Good evening, everyone. Welcome back to the channel. Today, I want to discuss another random topic. We'll discuss Asana quarter 2 earnings. And Asana is a stock that I've done videos on before. It's a stock that kind of picks my interest just because it has a cool name. And that's typically how I pick stocks. Just kidding a bit. Um, but it is a stock I've been interested in the past. I did a call option on it a few months ago. The option was up 40%, but then the stock tanked right after. But as of today, after close of market, the quarter 2 earnings came out, and this isn't that big of a surprise, but they beat earnings. And I'll show you why it's really not that much of a surprise because look where the analysts projected earnings to be. So if you look at the last 4 quarters, the stock has beat earnings, but over the last 2 quarters, analysts have consistently projected the earnings to be further down than the quarter before. And it looks like that's continuing next quarter. So chances are they may beat earnings again, just because that hurdle to overcome is less and less. So I'm not surprised because I just looked at this the other day and I figured that they would beat earnings. And as you know, like I talk about on this channel a lot, for those of you who watch a lot, is the earnings blast trade scenario, right? So Asana stock is going to open up 20.69% tomorrow. So if we look for year to date, obviously the stock's way down, especially from its 52-week high. The stock peaked at $141 or so. It peaked at 141.66 November 8th, and it's really fallen off since then. 1 year target estimate still projected at 34.36. But what tends to happen when I look at these earnings situations, like there's a lot of different opinions on options trading, but for me, um, trading earnings or getting into an option like a week or two before, it's worked enough for me to where I keep trying it. And like for this one, because this was an earnings beat, my hunch that it was going to be an earnings beat was right. So, and as you see that it's up 20.69%. So I'm going to try to show real quick here on the Thinkorswim app on Ameritrade, if my screen will cooperate with me. I looked at the December 2022 options here, and I was looking at the delta and the theta for December 22. So the theta is very low. That's the basically time value decay on the options. It's very low for these December call options. And I was looking in the strikes from $25 all the way down to 20. So what's going to happen tomorrow by the time the market opens is that some of these that were out of the money today, they're going to become in the money. And as you know, when you hold in the money options, assignment risk increases because it has intrinsic value. But the delta on the option is basically for every dollar increase in the stock price, the option is going to increase times that. So like for a delta of 50, this option should increase $50 for every dollar increase in the price of the stock. So we'll do some quick math here, saying that you held this as of yesterday or as of the last trading day at a delta of, let's just say we got in at the $25 strike. So say that's a delta of 42, and these change as the option moves too. So at a delta of 42, if the stock is going to be up 394, then that should be, the option should net $165 gain tomorrow on just one contract. But say you got in like 10 contracts. And what's neat about Thinkorswim is that we can do mock trades here. We can back test. So say that we got in, we're going to pick this $25 one and pick buy at the ask price. And this is going to show like what it would have done as of like August 31st if you got in. Let's see. Let me go to today. Let's see. Oh, I need to do this up here. So let's see. Go to, why is this not, maybe I haven't refreshed this, but let's see here. I must not have refreshed this, but anyway, you can see here this is 10 contracts for Asana. You can see how the delta went way up because it's times 10 basically. It's the 42. It's this delta here. This where was it? Oh, see, the delta changed the next day because I changed the trading day to September 1st. This information is going to be a little bit old, but well, it's about a week old. But as of what the delta was, and this hypothetically, if you're going to trade earnings, I'm outlining the strategy here just for educational purposes. Um, you would have that earnings calendar like I've talked about, and you would get in like probably a week or two before. So you would have been making this trade probably on August 31st or before if you did this properly. So it would have had a delta of 0.42 at this time. So you times that by 10, so you get 424.91. And obviously, like I said, if it would be $168 gain on one contract, then that would be, if I can get back to there we go. Okay, 394 times, what did I say, 42? So $165. If you had 10 contracts, that's $1,654 of profit on one day's trade. Doesn't happen all the time, but of course in a bull market, when you're having earnings beats, it's a lot easier, like it was a year ago. But let's see, what would that have cost? I want to try to see here. So the price of it, see, they're fairly cheap. It was, if you got in at the ask price, which I always recommend going in at the mid price, $255 per contract times 100 would have been 255. So if you were getting 10 of these, it would have cost you $2,500 and change. So you would have, based on where things are going to open tomorrow, if you were to cash this out like in the first 10 minutes of trading, you'd have a nice profit. And really, that's how you trade earnings. At least that's kind of how I do it. If anybody cares to, take notes on my strategy and emulate it just for educational purposes. Doesn't always work, but for me, it's worked enough where I keep trying. So yeah, with that, 20% gain in the stock. Now, the thing is, the way the market's been, and I did this a year ago with Roblox, two of my most viewed videos from last year when I started. I'm coming up on my 1-year anniversary as a YouTuber next Monday, actually. But back in November, Roblox had a huge earnings beat. And because I was down in the option, I sold out of it in the first 10 minutes of trading. Well, the thing kept running the next week. So $1,000 gain could have turned into much more, like I think like 30,000, which is insane. That doesn't happen all the time. But with this one, the way the market's been, I would probably get out of this like in the first 10 minutes of trading. Like I wouldn't hold on because this gain could be wiped out. If the market opens down tomorrow, of course, right now the futures are up, but if the market was to open down tomorrow, your gain could be wiped out quick. So to lock that in, you'd have to probably get out quick. But basically, that's the gist of how I look at trading earnings. If you like that, please remember to like, comment, and subscribe. And thanks so much for tuning in. And as a footnote here, some bonus content. I want to go over some of the other peer stocks. So there's UiPath. Affirm was one. There's this Datadog here. Upstart. Now, Upstart was an interesting stock last year. I got into this and I held it too long. I still hold it. And I've never had a stock do this before, but I was way up in this stock, like way up. And then within like 6 months, I was at a loss because I got in. I think it was I don't know if I should say this on here, but that company called the Motley Fool, they pushed this. So I got into this last year, and it was probably the best performing stock in 30 days that I've ever held because I got in like around here, and look what this thing did. It shot up to over $400, the 52-week high. I mean, it was insane. And foolishly, I didn't sell when I should have. But imagine buying options in this at the time. Actually, you know what? Let's have some fun. Since I got Ameritrade up, let's back test this trade. So we're going to go back a year ago to what some people call, the clown market of 2021. Everybody had their stimmy checks. Everybody was pumping, a lot of retail money flowing into the markets. You had kind of more or less a clown market. But let's look at what was possible. We're going to back test the trade for Upstart here. And then I'll skip UiPath and those other ones because I think those are all, decent. Well, maybe not decent, but they're kind of up and coming tech companies, tech stocks that I think have a future. They're similar peer stocks to Asana, but since I started talking about Upstart real quick, I'm gonna back test a trade real quick and Upstart options trades, because if you look from July 1st to October 1st, you see what the stock almost tripled in value. Actually, it did triple in value. But let's go back to Ameritrade here and look real quick. So we're going to type in, the ticker symbol is UPST, Upstart. And we're going to go back a year and wait till you see how much you would have made in this. This is going to be mind-boggling. We got to go back to last July. Come on. There we go. I'd say probably like July 15th or so. And these come up with the options. And this helps a lot. This is why I like Ameritrade, because it's very hard to find historical options data, but you can find it on here easily. So we're going to go to July, and we're going to pick probably, let's see, we'll pick December 21 expiring option, and we'll pick it at, I think the stock was trading around 100 something. So we'll go 150 or so. Yeah, we'll go 150. And we'll say we got one contract. Of course, in hindsight, when you see what this did, you'll say, oh, I would have, of course, made the right pick and bought 10 contracts. Well, probably not, because you could lose money the other way, of course, because that's, of course, how options work. You can either gain a lot or lose a lot. So let's X this one out. And then we're going to say profit and loss date. We're going to say October 21. And this is fun. Like, you can have a lot of fun with this tool here. So look at this. Well, this is based on 10, but if you know how to read this, you can see over to the right, profit and loss. You're going to see it going down because I'm going down to 1. But look at this. On an initial investment of, let's see. So this would have cost, at the ask price, this would have cost $1,400 for one contract. You would have made $22,625 on one trade. That's why I like call options so much. Now, call options haven't been great this year because the way the market's been going, I mean, everything's down. But I mean, look at it. That's phenomenal. And if you even had gone like further out of the money, like if you went, say you went to 200, just like a kind of a crazy trade. Not saying anyone rational would have done that, but just for illustrative purposes, we'll look at it since we're having fun here. Okay, so 10 contracts at this price, and we're gonna go to like October 15th. Watch this. So that would have been 185,000. But so the other one I showed you, the 150, would have made you more. I think it would have made 226,000. Let's see. Profit and loss date keeps defaulting back to July 15th. But you get an idea of the money that can be made in these. Look at that, 226,000. I mean, that's like a managing director salary at a major financial institution, just sitting at home making trades. I mean, that's not saying that's possible all the time, but when it is, it can accelerate your future a lot. And then, okay, let me X this out. I want to see when this thing actually crashed. I keep switching back here, but I'm going to switch back to Chrome just to see when this thing actually crashed. This was, okay, Upstart, come on. So this, let's see. I'm going to go back a year. Oh yeah, see, October 15th was almost the perfect time to get out because it started crashing around November, and it was like a roller coaster straight down. Anyway, kind of went off on a tangent there with Upstart, but I think that was valuable to see that on the Thinkorswim app. If you enjoyed that, please remember to like, comment, and subscribe. Thanks so much for tuning in, and I'll try to keep turning out the daily videos as much as I can. Thanks again. Take care. Bye.